And Andrew, President Xi talking for about 2 hours over the weekend and really saying, well, nothing at all to give any relief about what's happening around the property sector. Animal there outlined a pretty grim picture. Realistically, can this get fixed without heavy government involvement?
It can't get fixed even with heavy government involvement because the government really can't afford to do that much. And remember, this is a self-inflicted wound. Beijing basically imposed sharp cuts on the property market several years ago, really out of concerns for the debt that was being created. And ever since then, the central government has backed away from any large stimulus measures. Recently, we've seen some accommodating monetary policy with some cuts in interest rates, but that hasn't rejuvenated the property market because people really are nervous about investing their money in a very shaky asset class. So what we have seen, however, is the rise, once again, of shadow banking. A lot of local governments that have more or less doubled their responsibility for expenditure in the past 20 years are now turning to various shadow banks to get extra money. And many of these banks have borrowed from the banks, sort of the state-owned banks. So it's kind of an indirect central government stimulus, but it's one of these non-transparent things that could end very badly for China. So I'm not very optimistic about a turnaround in the property market.
Yeah, the stress is really everywhere you look. We had CFI Holdings default on a dollar bond payment a few days ago. What have we got? Junk bonds at record lows. These local government financing vehicles, as you mentioned, are getting into trouble as well. So is the question just a matter of what breaks next? And if so, what is going to break next?
Yes, exactly. That's the issue. I mean, you could have a financial crisis if you had a collapse of some of these shadow banks like the local government financing vehicles that have 23 trillion yuan of debt. So the government is going to try to cover that up. As they start to fail, the government is going to have to step in either with an indirect stimulus from support from the local banks, or you could find something where one state firm buys another state firm, and that sort of amalgamation of assets buries the debt. Obviously, Beijing controls the messaging, so it's has less ability for people to financial crises to go viral in China because of the media. So that's an advantage to them. Plus, you don't have the capital flight issue because of the closed borders that you had in the financial crisis in '97 in Asia. So they've got certain advantages. But at the end of the day, there's going to be a lot of deep pain, not just for the international U.S. bond investors, but also for local governments and local property owners.
When it comes to local governments, as you mentioned, we have seen them really active in the property sector. When it comes to those financing vehicles, how big a part of economic growth are these LGFVs when it comes to China's GDP, and how sustainable is this form of financing?
Well, it's not very sustainable. I mean, basically, the state firms and the LGFVs have replaced developers in buying land in order to prop up local governments because they need 30 or 40% of the revenue comes from land sales. The problem with that is that these LGFVs are running on fumes and don't have a lot of debt capacity. And in some cases, I've heard that they actually are treating them like short-term loans on the expectation that the property market roars back in 2023 and they can get their money back, which is a pretty foolish prognostication. So I don't think this is sustainable. And at the end of the day, the interesting thing is actually Beijing more or less told the provinces and the county governments, it's up to you to keep this in check. And they don't care so much about the collapse of the property market, although that's a worry. They're mainly concerned about giant protests erupting across China and the stability of the party being questioned. So there's a lot of issues, and the local governments are responsible for it, and I don't know what they're doing at this point. It's a tough one.
We have seen some state guarantees emerge starting in August with this scheme to really support those issues of local bonds by some developers. How effective will this be?
Well, state guarantees by who? I mean, if you're doing it by a local government that is running an 8% deficit and is basically borrowing from shadow banks, then that guarantee doesn't mean much unless Beijing backs it up. Now, local government could go belly up, could go bankrupt. But that's unlikely to happen. Beijing would come in and try to figure out some way of keeping them afloat. But the fact of the matter is these guarantees are only worth as much as Beijing is willing to step in to do it, and Beijing is not willing to do that at this point.
Okay, imagine that you were hired as a consultant to the government. What would you advise? What's the way out of this mess? Is there a way out?
Well, first of all, they need to reform the entire state system, because essentially they're squandering billions and trillions of dollars of money on state firms that have very small returns on capital. So that's the first issue, which is not going to happen. The second issue is that they have to open up their capital markets so people have a place to invest money apart from the property market. That's why people have been investing in that, because they figure it's a healthy future investment. They stopped doing that now, so that's a problem. So those are the two issues. What we are seeing realistically is a flight to safety, which is state firms. So a lot of the state firms are getting capital from the banks, or they're buying land, or they're doing some of these transactions. But that's not going to solve the problem. That's just replacing one bad group of money for another. So I think a modest amount of reform may actually happen on the local side, because they'll be forced into a corner.